Welcome to Business Middle East. In this episode, we look at the impact of the European Central Bank's recent meeting. And in Business Snapshot, OPEC says it's optimistic there'll be no change in the oil production ceiling. The markets were caught off guard after European Central Bank President Mario Draghi's optimistic remarks about the quantitative easing program, which is underway. Draghi's cautious tone reflected negatively on European bonds, which rose after he warned of continued market volatility. The euro also saw a significant hike last week. We'll discuss the causes of that in a moment, but first, let's get more detail.
The European Central Bank kept interest rates unchanged at 0.05%. Last week, ECB President Mario Draghi seemed optimistic about the progress of the quantitative easing program. In his statement, Draghi cut inflation expectations and told markets to get used to volatility.
Recovery is on track, exactly according to our projections. All survey indicators and other data show that domestic demand in the euro area remains strong.
But Draghi's comments caused a rise in European bond yields, mainly German government bonds, which climbed to their highest levels of the year. Those are considered among the safest asset classes. The euro rose against the dollar to reach 113.80 last week, its biggest rise since mid-May. Launched in March, the ECB's massive bond purchasing programme aims to purchase 60 billion euros of bonds a month until at least September 2016.
For more analysis of the market reaction, joining us is Nur El-Din Al-Hamouri, Chief Market Strategist with ADS Securities in Abu Dhabi. In March, we were talking about the parity of the euro and dollar. Last week, we saw a significant euro spike. How do you interpret this? What are the upcoming trends?
Yes, we note that talk of euro parity with the US dollar might not come as fast as the market wanted. We said at the time that the US economy was likely to slow down, which would lead to the Fed waiting longer before raising rates. In the meantime, the euro is likely to continue trading in its current range. That's due to the Greek question and the uncertainty about Federal Reserve policy.
If bond yields continue to rise, do you expect an intervention by the European Central Bank?
We believe that the ECB will try to intervene, but not through adding more liquidity to the quantitative easing program. Yes, the ECB may start to intervene following Draghi's remarks, which will likely help calm the bond market.
Okay, Noor, stay with us for Business Snapshot. As expected, OPEC has maintained its current oil production ceiling of 30 million barrels per day. Saudi Oil Minister Ali Al-Naimi seemed very satisfied with the decision and hinted that the oil price wouldn't hit $100 a barrel again until December.
OPEC's latest meeting concluded last Friday, with member states agreeing to extend the current oil production ceiling until the next meeting on the 4th of December. OPEC leaders, led by Saudi Arabia, confirmed that there was no need to change the current strategy to invigorate weak oil consumption and curb the US shale oil boom. Oil prices fell last week to levels of $58 a barrel and were influenced by a statement by Abdullah Salam al-Badri, OPEC president, during the closing session.
The reality now is that we cannot have this $100 anymore. This is a cycle. We have less value for our barrel.
Nor in Abu Dhabi. Despite the expected results of the OPEC meeting, prices fell. How do you see the market acting until the 4th of December?
Well, we're quite far away from $100 barrel levels, but we now need to look at two important upcoming events that could affect the price. First, there's the Fed decision, and second, the potential nuclear deal between Iran and the major world powers. So prices may trade within a tight range, or maybe we might see some wider fluctuations.
That's all for now, but you can share your comments and suggestions via our Facebook page, Euronews Business. Thanks for watching and have a nice week.